Tom Lee is here. Good morning, Tom Lee, Fundstrat. It was 2 weeks ago, it was a Monday, and you made that call of 100 points on the S&P on a softer inflation number, and that happened. So then last week on Monday, we had you in again to talk about it, and you said you're still bullish. So Monday, I just did the math, 11 straight days in the Dow, so you were bullish on Monday, but you weren't going to say anything about the week. You're smart enough to stop doing that. But so you're got credit for another 6 out of the 11 days. So it's been 6 more days after that the Dow's been up. What did you see differently than people like Mike Wilson at the beginning of the year for you to be at 40? Where were you at the beginning of the year? 4,500?
4,750.
4,750 at the beginning of the year. Mike Wilson's now saying he's at 3,900. The bear case for him was 3,000 or 3,200, and the guy at Piper Sandler was at 3,000 was like a slam dunk for him for where it was going to go. What did you see that was different from these gentlemen?
I think the biggest difference was we were looking at the inflation internals and thought inflation was on a glide path lower than consensus and even the Fed expected. So we thought there was a good chance the Fed could sort of back off its fight against inflation, and that would make it a 1982 moment because it's an inflation war. So I think that was probably the central thing. And the second is we had a lot more belief in corporate resilience. I think companies last year were given notice to prepare for this massive hiking cycle. They ran expenses really tight, and delivered earnings this year have been much better. So I think the combination would support stocks.
Just overall, Tom, just your approach to trying to decide how devious the market acts, and you can go all the way back to Jesse Livermore. It tries to do things to confound as many people as possible, so that not as many people are right going up or down. Constantly, it tries to do it. So if you've got a person that if you were all talking about a recession, and we're all talking about lower corporate earnings, and that earnings got to come down, and we're all talking about these things nonstop, and people are and say we're going down another 20% when everybody on the street knows what's happening, can't you just say that probably isn't going to happen, that it's already in the stock? If you have that job, why doesn't that inform you that maybe you shouldn't go with the crowd? Why can't they figure that out ever?
That's exactly right. At our company, we talk to our clients constantly, and that was also pretty evident. Every time the market plateaued or wobbled this year, our clients were ready to short and to sell. And even this week, the market wobbled, a couple days last week, and people are ready to short the market. So I think we're still in a position exactly described, which is people are bearish and ready to sell. No one's really embracing this as an upward new bull market.
I don't want to harp on Mike Wilson, but so he's finally able. You got to somehow get yourself out of that pickle and say I was wrong. But his with the mea culpa, his year-end target's 4,200. So it's just more of the same, right?
Yes, that's right. You can tell people are still bearish because the strategist year-end target on average is 8% downside. And the strategists reflect the buy-side sentiment. So most professional investors think the market's going to go down between now and year-end. I think, yeah. So then have you
been wrong more often by being too bullish? Because that would be my problem, I'm sure.
Well, I've been covering markets for 30 years, so I've been wrong a lot.
On both sides.
Yes. I learned that being bearish was really painful when I did wireless. My most famous short sell call was Nextel, which did run up for a long time, but then finally essentially imploded Sprint. So. But it was a painful.
Jesse Livermore.
Is that why you're more optimistic now? Because you got burned by being bearish at times? I mean, if you look at the markets over the long haul, if you're doing this for a long time.
It goes to from 800 to 45,000. It's probably good to be long most of the time.
Yeah. Well, I covered wireless when it was 34 million subs, and it went to 7 billion. And everybody called it a speculative bubble sector for 14 years. So I think I'm just used to people being so negative about the future that we tilt a little more positive.
It's always more fashionable to be negative and to be, doomsaying, black swans and all these things. You can always do better. And you can be short and be right, but you can be shaken. You got to have the financial wherewithal. Jesse Livermore eventually killed himself anyway. So you
I
can
didn't
be
know
right,
that.
but you're still not going to be able to. You may not be able to last long enough to see that you're going to be right. So you're never. When would you turn bearish?
Well, I think we would turn bearish if there is a recession, because it is really difficult for stocks to actually rise through a recession.
So you don't think there's a
Even if it's
recession
garden
coming?
variety?
I mean, eventually there'll be one, but I think in the time frame people are saying, 6 to 12 months, it's
Not
pretty
gonna
difficult to. In fact, yeah, and we had 2 negative quarters of GDP last year, so in some ways we already had.
In a rolling recession as
Yeah.
well in different industries. Well, if we were going to have one, so you don't. Now we're back to trying to figure out the discounting mechanism. So if a recession isn't coming in 6 to 12, let's say it's coming in 18 to 24, that still would only give us about 6 months more of bullish action.
That's true, unless, of course, the Fed starts easing or inflationary pressures disappear, because, there's a lot of potential stimulus coming. Mortgage rates at a 3.7% 10-year, the 30-year mortgage should be 5% or so, not 7. When that drops, that's huge stimulus coming.
So that would make the recession shallow, or that would counteract the recession for the market?
It might even stave off a recession, because consumers aren't levered. Yeah, it would actually be a lot of stimulus.
We might not have a recession even in the next 2 years then.
That's right. And companies batten down the hatches. They're not going to get tripped
They're
up.
going to do better either way.
Correct.
I was just thinking how your profession is a lot like seismologists, because it's really hard to claim, okay, here's where the next volcano is going to be. That's like the bears who do it. And even when they're right, like David Johnston was, he's the seismologist who warned that Mount St. Helens was going to blow, got everybody evacuated, but he died in the explosion because he waited to film it and his calculations were off and it came out the side instead of going up the top. And he died as part of it.
Wow.
That's like the Livermore story.
Right.
Yeah.
You can't win, Tom. That's what I'm trying to tell you.
That's right.
And then you get all these right calls, then you die anyway someday. So, I mean, it's really not, but maybe.
So congratulations.
Yeah. Bitcoin, that got you worried at all here? We had an actor on who, I don't know if you saw that.
I did
and I
see
mentioned, what do you think of that?
I think that there is a populist angle to what he was saying.
Have any of them done he said he did a deep dive. Do you think he understands anything about it? Or?
I think if someone did a deep dive and went around the world and talked to people who are using Bitcoin because they don't have access to banking, they'd have a very different view of how useful crypto is.
Can I defend the actor for a moment? A huge part of his thesis, I thought, was right, which is there are a lot of fraudsters.
I didn't have a problem with any of that.
The idea that the FTX and CZ, like all of these.
But Bitcoin doesn't care about who owns it or who's trading it or what exchange it's on. Bitcoin is
that there's a lot of fraudsters around this, and you got to be careful.
But the asset itself, that's like saying First Jersey Securities or Stratton Oakmont is a commentary on the underlying stock market.
That's right. And 97% of publicly listed stocks since 1970 have gone to zero.
Yeah.
So, I mean.
How many?
70%. But it's
the
vast majority of public listed companies go to zero.
We can look at a list of stocks that have moved around up 100%, down 60%, blue chips.
Yeah, that's right. Capitalism just fails often.
And there's stories, it's always what someone's willing to pay on any given day, even for a stock, especially non-dividend stocks. What are you buying there exactly?
Yeah.
Other than a story. Anyway, Tom, thank you.
Thank you.
Thank you. Good to see you. It's like a weekly thing now. Look forward to it.